All right, and welcome back to Bitcoin Advisors channel. My name is Chris, and yes, we're getting some rain here. And what do you see in the background here? I wanted to show you a quick, short-term little scalp trade here. How to kind of use Fibonacci, stop loss, and take profit. So just real quick here on a shorter-term time frame. For all you traders out there that want to kind of get to know how to trade the shorter-term time frames, well, this is a 5-minute time frame. And basically what we've seen here is a consolidation right here. So a fib rotation from the high to the low gives you these different fib targets. And typically what happens when you come down and you hit the 786, you're going to come back down to the 236, back to the 786, back down to the 382. So how I like to position myself for a shorter term trade like this, I just entered the trade right here about 5 minutes ago. And what I'm gonna do is I'm gonna put my stop loss here, my take profit here. And what is this coinciding with? Well, the dollar is having about a 15-minute breakout. So breaking the downtrend on the 15-minute time frame. And that, so dollar breakout on the 15-minute time frame. Got a couple drives of hidden bullish divergence here. And I'm estimating actually that the dollar probably hits back towards the 786 at a minimum, if not going for more, as we did call out yesterday on the daily time frame. Very, very likely the dollar was putting in some hidden bullish divergence and going to make a run up to our 105 target, which looks like that close enough. Hit 105.33. I think it has another leg on it. This would be a bullish engulfing. And so if the dollar is going to go up, risk assets typically go down. This is a higher term time frame. So the daily looks like we're going to get a little bit more continuation to the upside. Reminding you all that volatility has been extremely low on the dollar. It is just now expanding, getting out of the bearish control zone. Stokes are up. And so I am looking for a fresh new ride up on the dollar. We've been talking about it for some time. And really that'll be initiated getting above the green 55. So I don't know if it takes a couple more days, but really back above this pivot here, 105.70 is going to initiate that, next move higher for the dollar. 2-day time frame, volatility is declining, so the expansion off of this move will get some juice as well. And we expect on the higher term time frames for the price to go in the direction of the trend, which the dollar, if I need to reiterate here, has been in a macro breakout. So on the weekly time frame, we're making higher highs and higher lows. And, would you call these, that's a low, that's a low. So that would be our first lower low, lower high trend reversal on the weekly time frame if that does happen. All right, so dollar, bullish on the dollar, at least over the next couple of days, which means bearish on stocks and Bitcoin, at least for the next couple of days. And what's interesting about that is I'm going to head back to the weekly volatility, which, by the way, the weekly time frame is giving a bit of a buy signal saying, hey, if we are going to rally out of this region, it's probably going to do so from this region before making new lows. However, it all depends on the dollar. If the dollar wants to get greedy and start round to the upside, well, that could push Bitcoin to our lower target, which out of this consolidation of this massive range, we already hit the first target, second target, $10,000. So if we start to lose this region on the weekly time frame at 15.5, you'd be looking for some further downside displeasures on Bitcoin. On the weekly time frame, I'm going to throw up Ethereum here. Ethereum has been relatively strong against the other currencies, and Let's see how that stop loss is going to take out here. We would have already got stopped out, so I'm going to go ahead and I'm going to wait for the next tick on the 5-minute and see if we can get a little, oh, there it goes. And this is when you want to have emergency stops. So 406 on the loss there. So never get hurt taking a small loss. It happens all the time. It's part of trading and part of live streaming it right now. Getting a little bit deeper into Ethereum. Let's take off some of the squiggly lines and let's take a little deeper look into Ethereum here, as Ethereum has been a little bit stronger than Bitcoin as of late. And I'm just getting off some of these major trend lines here to see what we got on the daily time frame. So the daily put in a big, nice rally up to the green 55. Typically that's going to be a sell on the first pass. However, this isn't the first pass. This is after the cross, second pass. So third pass usually breaks. And that's why I have had this bias that Bitcoin and Ethereum probably comes down first, retest the lows, and then gives that real shot up to the next target. 1480 on Ethereum, and for Bitcoin, that would be much higher, about 21,000 at the purple 200 on the daily time frame. So Bitcoin could get going from this region, and as long as on the daily time frame we're still below even this leg right here at the 618 at 19,000 bucks, it'll be pressure onto the downside, just lower highs and nothing much to speak out. However, I do believe we're going to get a pretty decent move here, and I still think the dollar is going to break out, so I kind of want to take that trade to the downside, maybe off the next tick. I think that's if it. So again, shorter term targets, let's just wrap it up here real quick. Based on the dollar, right? So if the dollar does break 105, that will initiate targets for me on Bitcoin down to the bottom side of the range at 15, call it 15.7. I'd be looking for 15.7 to get hit with the short stop. If 15.7 breaks, the next target down is going to be right there. Consolidation high to the low. A more conservative look, yes, does give us that target there with the second target there. So, it depends on how violent the dollar wants to get to the upside. If the dollar does crack above 109, I do think we'll be heading down to probably the second target between 14.3 and 14.5. I don't think there's enough juice in the market right now to get us down, frankly, much more than that. And again, this is for Bitcoin. Ethereum's going to be kind of the same game here. If the dollar rips to the upside, well, then retest the lows, and if the lows break, so here and second target here, and let's see if that lines up with anything. Yeah, it does. First target, second target. Now, those are the bearish things on the board, since we're expecting a little bit of a dollar rally, especially given the economic data, which, just to give you an idea, yesterday and today, more jobs numbers came out, worse than expected. Jobless claims was down. Continuing jobless claims down. And unemployment change, we got more people employed, a drastically high number. So ADP December change in employment estimation was 150,000. We got 235. And the big one yesterday was the JOLTS numbers, job openings. Yesterday, the JOLTS numbers came out, and just to refresh my memory, job openings was expected to be at 10 million for November. Came out at 10.5 million. So we had 500,000 more people with jobs openings. Sorry, another 500,000 jobs opened in the month of November. So what does that mean? If 500,000 more people are more companies are now hiring more people, that's not good for inflation. That means wages are probably going up still, and that means more inflation, and it shows what the Fed has been doing has not been working. And that's why, here's what the Fed said yesterday. They want flexibility on rates as inflation remains the key focus in the minutes. So I would actually disagree with this article. Why? Because inflation was not the main target of the minutes. It was the jobs. Why? Because if more people are employed and they have more money, they're going to go spend more. It's going to create more inflation. So Federal Powell, Jerome Powell wants jobs openings to go down. He wants job quits to go up, and he wants unemployment to go up to tamp down the spending. So other than that, more economic data came out of China saying the COVID reopening wasn't quite the reopening they were expecting. It was the China, I think the China PMI came out a bit hot. And then the overall numbers for, I believe it was the ISM manufacturing numbers. Either way, China had an opening, COVID zero policy went down, and they were expecting more of a boom out of China. We didn't quite get that. And maybe it's just the first month of bad numbers, and you would expect after the close down and a reopening in China, you'd expect some more positive economic numbers out of China. So we'll have to see how the next month tables out. But as far as I know, China's just in probably worse of a position than us when it comes to the real estate market, and they also have been tightening to, hold the value of the yuan up. Let's just check in on bond rates real quick, gold and silver, and we'll call it a day. Some of the other currencies taking a hit today, and gold and silver taking a hit as when the dollar goes up, typically metals go down. And gold holding strong in a bit of a breakout here, and does look like it wants to run a bit higher. About to get a sell signal on gold, a pretty good one at that. So if the dollar does expect to pop back up a little bit here, where could we potentially expect gold to come back down and retest? Well, previous resistance becomes support, and this is what I would say. Previous resistance become support. So we've got these areas right here. Gold on the daily time frame. I believe people want to see gold more on the weekly time frame. It's kind of on a macro. Little bit of a breakout here, and the week is not over, so the daily here is going to cross down here pretty soon. Daily Stokes cross down below 1834 today, and you'll have multiple drives of hidden bearish divergence, giving us a range play maybe down to this golden cross for Mr. Bitcoin. Or for Mr. Gold. So I'm looking for gold to come down a little bit, maybe around 1800, before putting in another higher low. And as long as we're above this region on the daily time frame, I'm still going to be bullish for some additional upside pleasures in gold if you're a gold holder. Silver's going to do whatever gold does, but more, as gold's down 1%, silver's down 2.2% today, and we are crossing down. Momentum is going to increase to the downside. And I'm expecting silver to come back down and test this level at 22.22. Again, not financial advice, not a financial advisor, but I do expect gold and silver to perform well at some point this year. That'll coincide with the dollar coming down. So as the dollar makes the lower high right here, that's probably going to put together a pretty phenomenal buying opportunity. If you're looking to pick up some more gold, I think gold is probably going to run in this inflationary war crisis, COVID explosion type environment. Gold is a safe haven asset in the times of war and uncertainty. And so if gold performs well, silver should perform well. And yeah, I do think there is the potential. Again, if the dollar loses this region at 103.37, if we lose that region, the next leg down is, 102. But the point is that will initiate continuation of the downside and would be more in line with Bitcoin taking a 20% move to the upside. So again, I think the dollar is key here. The dollar is king, and all eyes on the dollar will help us in the long run. But we are getting a pretty nice buy signal. Will cross up today above, or tomorrow, the 2-day time frame will cross up and initiate some of those higher upside targets. I think we're looking at probably somewhere around 10 to 20% to the upside, and then we play the game of lower high or not. Again, the conditions for a macro bottom to be put in have not been initiated. Some of those conditions we have talked about is on the monthly time frame. We want to see the MACD cross back to the upside. We are still very negative. We want the accumulation distribution indicator to catch a positive slope on the weekly time frame, which we are still quite negative. Are we was it the daily or the weekly I was looking at for the accumulation distribution indicator? So was it the daily? Was it the monthly? Yes, it is the monthly. Okay. So, wow. We're losing the curvature a little bit, but this is still negative. So, we want to see this get a positive slope, and you can just mark off a couple of areas right here. Once the monthly time frame picks up a positive slope, typically there is going to be a macro low put in. So let's just look at the last 3 times here, see what kind of results we've had thus far. I'm going to take off these guys. Okay, so macro low in, macro low in, macro low in, 3 times makes a trend. So this is one of the key indicators that we will be using to identify when the macro low is in. It's getting close, but it's not quite there yet. Okay, time is up. Time is up for this recording. Hope you had a blessed and highly favored day. I love you guys, and I will see you tomorrow. Take care.